All righty. We are live, unscripted, and here. So see people trickling in. Thanks for being here. Wanted to be timely and start on time. So Melanie, good to see you. John, welcome, welcome. If you can put in the chat as you filter in, um, I'm dialing in from lovely Sacramento, California. We've gotten some rain recently, and I'm enjoying the dry weather. I like it when it rains because I say I get to water my bald spot. If you can put in the chat, can you hear me? Can you see me? What did you think of my terrible dad joke? Let me know if you can see and hear me. And we're going to give folks just another moment or two to filter in. And I'm going to, I see a Q&A. Oh, disabled chat. Thank you. Technology when it works. Thank you, Melissa. If you don't mind, try it now. I think that is set. There we go. Welcome, folks. Great to see. I see some familiar faces. So I'm going to make a note. Disabled chat. Like I said, technology when it works is a beautiful thing. All right, I'm going to get started. So welcome, welcome, and we are grateful that you are here. I'm going to share my screen. Let me know if you can see my screen. It should say Optimizing Your S Corporation Workshop Day 1. Can you see that? Drop me a 1 if you can see my screen. You should still see my floating bald head somewhere on the screen as well. Sweet. I see a 1. All right, guys. Well, thank you for being here. The worst thing on the planet, in my humble opinion, is to have your time wasted. So we are hopeful that you will find value in what we're going to share with you today. I'd like you to engage in the chat here. So we've set the recipients to everyone. If you're dropping a question in the chat, if you have that question, chances are somebody else has that question. I will keep an eye on the chat as we go along. The Q&A is also available for you, and periodically I'm going to check and make sure you're awake and with me because, yeah, this is taxes and it can be a little dry sometimes. So with that respect, I would like to introduce you to what we fondly call the FIRE acronym. I'm an accountant, and I think engineers are the only other profession that like acronyms more than accountants. Maybe you can tell me if real estate or any other, I think everybody here is real estate so far. So FIRE, what FIRE stands for in the Make Taxes Fair world is focus. So you're here, I want you to focus in, give me your attention because we're going to give you some strategies and education and show you the impact, right? I find that when you understand how something impacts you, then you're like, oh, okay, I learned something. I understand the impact. Now it's a chance to review what are the next steps that you need to accomplish and what we need to do to get to efficiency. So appreciate you being here. Let's focus in. So who am I? Chris Middleton. I'm a husband, a father. I've got 2 amazing girls and a lovely wife who I'm very grateful for. I'm a tax strategist and an enrolled agent, meaning register with the IRS to do taxes. And I've been doing taxes for almost 20 years. But just like you, I also am a busy business owner, and I appreciate the fact that you're here today. So what are we in for today on the docket? We're going to introduce you to who Make Taxes Fair is, what our Clear Edge framework is. I think you'll find that interesting. We're going to go through what are the benefits of an S corporation. So if you have an S corp or you've been thinking about starting an S corporation, we're going to cover how that can help you and how to maintain that S corporation. There's going to be a special offer for live attendees. So if you're live and stick around with me, there's going to be a special offer for you. And then we're going to give you a sneak peek at day number 2. This is a 3-day workshop, an hour a day, quick, targeted. Let's go. So Make Taxes Fair, who we are and what is our philosophy? Well, at the core of our belief system, we believe that the tax system is broken. Why do we say that? This is a lovely visual aid. Who can see this roadmap, right? What does that look like to you? Does that look like a roadmap or a subway system, right? When I sit there and look at that, I see a system of confusion. Well, that's an IRS produced graphic that is how the tax system is designed to work. I'm like, that's a mess, right? No wonder there's so much confusion around the tax law. But we see rich, famous billionaires, politicians, people in the headlines paying little and nothing in taxes or very low tax brackets when they're making high income. So we know that there are systems to combat the system of the government. Well, the struggle that most business owners face is they lack the time, energy, and desire, right? I know what I need to do to get rid of the dad bod. I just lack the energy and desire to make it happen. Everybody has the same amount of time. And when it comes to taxes, that's no different, right? Every busy business owner ever is like, oh, my CPA's got me covered, right? But in reality, most CPAs don't, because I contend, no disrespect to your accountants or CPAs, most CPAs are what I would call happy historians, meaning they're approaching your taxes from a very reactive state instead of a proactive state. So, who make taxes fair is, and that's our mission. I hate the term small business, but there's nothing small about being in business. But our mission is to help the small business owners of America with a tax reduction system designed to cut your taxes by 30 to 50% or more without the fear of audit or jail time. And how we accomplish this is through what we call the Clear Edge framework. So the Clear Edge framework talks in terms of pillars of tax savings is this: credit, tax credit optimization, legal structure, how that impacts your taxes. Backing up to credits, credits are great for tax savings because it's a dollar for dollar reduction in tax. Legal structure is what we're diving in deeply on this today in this webinar. We're going to talk about legal structure and employees if you're an employee of your own corporation. And there are rewards and things we're going to cover in the workshops day in two and three about how to help employees and give them benefits that are tax-free. Accumulation of wealth and retirement planning, two very connected items, but very different. Exit planning, exiting your business in a tax optimized way without Uncle Sam being a majority shareholder of your business. Deduction optimization, how do you optimize deductions? We'll hit heavily on that tomorrow in day 2 and then in day 3. And then ultimately getting organized and the tax benefits of kind of getting a handle on things to obtain efficiency. So we're very proud of this. This is actually a not patent pending, but trademark in process to protect this. This is our IP. To my knowledge, we're the only accounting firm that approaches tax planning not only on the front end, but on the back end with follow-up in a systematic way. So very proud of what we've developed here with our Clear Edge framework. Before we get too far, I want to just tell you this information in presentation today is not legal or tax advice. It's general information and very broad in scope, right? Legal and tax advice is when we sit down with you and say, here is your circumstances and how this information applies to you. So today is meant to provide education and guidance and hopefully show you the impact of these tax strategies and tax savings opportunities. So also want you to not tune me out, like let's stay awake. Who's still with me in the chat? I want to make sure that, can you still see and hear me? Drop me a 2 or drop me a 1 if you can still see and hear me droning on. Sweet. Thank you for letting me know. And we've had a couple. Thanks for jumping in, Stacy. So S corporations, don't tune me out, right? If you know enough about S corporations, or you think you know some things about S corporations, some of this may be familiar. So repetition is the mother of memory, and sometimes revisiting the basics is not a bad thing. So if it seems familiar, don't tune me out. We're going to be laying the foundation for later on today's workshop as well as tomorrow and the next day. Okay. So S corporations. How are they a tax saving structure? It surprises me, I guess not anymore. I've been doing this for almost 20 years, but folks say, hey, I'm an S-Corp, but they don't understand why or how that benefits them. Or they're like, hey, I'm an S-Corp, but they think they're an S-Corp, but they're an LLC, et cetera. So we're going to go through a little bit foundationally of what an S-Corp is and how it can save you money on taxes. So to understand S corporations, first we have to understand there is no such thing as an S corp. So business entity wise, you're either a sole proprietor, and that's kind of the default status, right? You can run out and set up a business without any setup required. Really, you can use your social, you can use your name, your if you want to do a doing business as like Chris Middleton, the bald tax guy. If I wanted to do a DBA for the bald tax guy, I would have to file some paperwork and publish some things, to make that DBA known to the general public. But sole proprietors, there's no liability protection, there's no separation between you and your business. So ultimately, you're on the hook, and many of us who have been self-employed in our life have experienced that, oh crap, I owe what on my taxes? Because we pay the full self-employment tax, which is effectively Social Security and Medicare, right? So if you want to change that, if you want to get out of default status as a sole proprietor, you can form either an LLC or a C corporation. If you go to an attorney and say, hey, I want to create an S corp, they're going to say, okay, do you want to be an LLC or do you want to be a C corporation? Or are you required to be an LLC or a C corporation? There is no such thing as an S corp, and I'll explain what that means in a moment. So an LLC is a legal status. You file with the Secretary of State, you get an employee tax ID number. You have to keep things at that juncture. You've created an entity, and in the eyes of the law, I'm not an attorney, nor do I pretend to be one on Zoom, TV, or the telephone, but in the eyes of the law, your LLC is considered to be a separate legal entity. And so at that juncture, you need to keep your business and personal separate, right? LLCs are considered flow through, meaning you don't pay any taxes at the federal level to the IRS. All that income, your profit or losses, flow through to you personally, and that's where the taxes are paid. Different states have sometimes have franchise tax board, like with California, has a FTB minimum $800, pounds of flesh that you have to pay every year. But the states may impose, depending on the state that you're in, may impose a franchise tax or an LLC or something of that nature, right? A C corporation is also a separate legal status, also filed with the Secretary of State. Same kind of song and dance. You get an employer tax ID. You have to keep business and personal separate at that juncture because you're a separate legal entity. The difference is a C corporation, if we do not make the S election, the C corporation pays a flat corporate tax rate, which is currently 21%, set to expire at the end of this year. So we'll see what the Congress critters do about the expiring tax provisions. We'll see what that turns out to be. But you pay a flat corporate tax rate at the C Corp level, and then any distributions that you pass through or pay out as dividends that are not W-2 wages, then those dividends are also taxed at the personal level. So there's double taxations with C Corps, right? It's basically same requirements. You have to create a legal structure and have an operating agreement and all that. But the key difference between LLCs and C corporations is it's flat tax. So I'd like to illustrate a little bit the tax bite and what that looks like if you're a sole proprietor or a C corporation. So we're going to assume Janet, she's single, no kids, she's a Florida resident, which means, hey, no income tax, trying to keep the example simple. And she's an engineering consultant. Her gross income is 120 grand, expenses of 20,000. She's selling her time. That's one of the struggles of business owners is if we're in the service industry, we sometimes don't have a lot of expense, hard costs. So she's selling primarily her time. She has a net profit of 100 grand. Let's assume for a C corporation that she has a W-2 of 40,000. So that 100,000 is split between 40 grand and 60,000 dividend. Well, the tax, if she was a sole proprietor and an LLC, the tax implications or the tax result is the same. Sole proprietor and LLC, you still pay the self-employment tax, you still pay income tax. So her total tax bill on 100 grand would be 26,660 bucks. If she was a C corporation, again, assuming a $40,000 W-2 and the rest in dividends, her total tax bill would be slightly higher at 27,649, right? So both north of 26% of income. So the big drawbacks of a sole proprietor or an LLC is you bear the full brunt of that Social Security and Medicare tax. And with the C corporation, you have the double taxation. So, there are reasons to be a sole proprietor or an LLC, and there are reasons to be a C corporation. But if you're an active business, meaning I'm showing up every day, I'm typing on the keyboard, I'm talking to my clients, I'm an active business, not a passive business like rental properties or rental income. Passive income is best held, generally speaking, in an LLC, and active income is generally best held in either a C corp or introducing the S-Corp election. So if you're an S corporation, sole proprietors, you do not have the ability to elect an S corporation. You're stuck as a sole proprietor. But if you go to an attorney or DIY it. I never recommend DIYing your legal stuff, right? I don't sell my own home. I don't perform. I'm going to the dentist later today for somewhat of a emergency filling, and I don't do my own dental work, right? So I don't recommend DIYing your legal. But if you go to an attorney and say, "Hey, I want to be a S corporation," and you say, "Okay, can you be an LLC in the great state of wherever you're at, or should you be a C corporation?" Some states restrict. For example, I'm based in California, so I deal with California a lot. California, if you're a contractor, the state contractors license board does not like LLCs. They want you to be a C corporation. Same with real estate agents. Actually, if you call the Department of Real Estate and ask them, they historically have let the LLCs slide through the system. But if you call them and say, "Hey, what do you want me to be, an LLC or a C corp?" Which I've done several times over the years to make sure we're still current on that. They say, "Hey, we want you to be a C corporation." Well, I don't want to be stuck paying high Social Security and Medicare or double taxation, right? So that's where we make what's called the S election. So I set up my LLC or set up my C corporation with an attorney and then immediately file. Sometimes not immediately. Sometimes there's a reason to delay the S election filing. That's a deeper subject or deeper topic, but you make the S Corp election by filling out the form 2553. I want you to drop a 2553 in the chat if you're still with me. I want to make sure everybody can still hear me, see me. Haven't seen any questions so far. Perfect. I see. Thank you. So 2553, I don't memorize IRS forms, but that is one that's emblazoned in my brain because you have to submit that to make the S Corp election. And then you got to watch the mail like a hawk to make sure that they accept your S election and send you the letter saying, "Hey, we've acknowledged that you want to be taxed as an S corporation." That's amazing because when you're acknowledged as an S corporation, your S Corp net earnings are exempt from Social Security and Medicare tax or that blasted self-employment tax. Okay. So you also avoid the double taxation. So what does that mean, right? We can say that, but it's better to revisit that with an example. So remember Janet, our engineering consultant. There's the details again, 100 grand. And if she was a sole proprietor there in the green box, her tax bill would be 26,660, and her tax bill as a C corp would be 27,649. Aha. If Janet made the S corp election, she would still need to take a W-2. So we said $40,000 as a W-2 wage, and the 60,000 is an owner draw. So similar as an S corp. You see on her 1040 that $100,000 doesn't disappear. She still makes 100 grand, but on her 1040, She has W-2 of 40,000 and 60,000 of S corporation net profit or owner draw. Here's a fun fact: whether you pull money out of your S corp or not, whether you draw it out, I should change that to be 60,000 S corp profit, because whether you draw the money out or not, you're still taxed on that money. It's yours to claim as income, and it's also yours to take as a draw or leave in the business to pay for upcoming expenses, right? But total tax bill is 20,214. So which of you would want a 26, 27,000 or a $20,000 tax bill, right? Clearly an S corporation, I mean, that this is a example of about $100,000 of net profit. And for somebody that's in the single tax brackets, so just for simplification of the scenario, but you can see where an S corporation and the primary tax savings from an S corporation is a reduction of that Social Security and Medicare tax, right? So that's where an S corporation really wins the battle of tax savings. Again, there are legitimate reasons to maintain as a C corporation or maintain as an LLC. There is no one size fits all when it comes to tax planning. You really want to make sure that the circumstances are accurate for you. But benefits of an S corporation, and again, I'm not an attorney. I don't pretend to be one on TV. An S corporation adds a layer of liability protection. My understanding, in most states, if you do something stupid, you're going to be liable. If you have an employee that does something stupid and you told them not to do that stupid thing, i.e., sexual harassment trainings, hey, this is how we operate as a company. These are our policies and procedures. Don't lie, cheat, and steal while you're on the clock. Do that on your own time. Just kidding. At the end of the day, it can add that layer of protection for potentially the liability or of actions of others. Again, most attorneys that I choose to do business with over the years have indicated to me that an S corporation doesn't really, or an LLC or an S corp, your legal structure doesn't give you as much liability protection as you might think, but it can add a layer of protection. So legal structure, when you have a legal structure, that opens up the door to other tax strategies. And we're going to see this, especially tomorrow. We're going to hone in on that deeply with 3 strategies. It's supposed to be 2, but we're going to sneak a third one in there. The day 3, we're going to talk about deduction optimization that you can only do when you have a corporation, right? So legal structure, because your legal structure in the eyes of the law is considered to be a separate person or a separate entity, gives you the ability to create some separation between you and your business. So it opens up some tax strategies. Avoids the double taxation. As corporations are great because there's no federal income tax. It flows through from the entity to you personally. That does not mean that you may not pay state taxes. Tennessee, the state of Tennessee, has kind of a funky law that really kind of negates a lot of the benefits of an S corporation for the most part. So you have to be cognizant of your state and whether or not your state has provisions or non-adherence to federal, non-conformance is what it's called when they don't conform to federal law. But the big benefit of an S corp is that self-employment tax savings. So liability layer protection, no double taxation, less payroll, Medicare, Social Security, Medicare taxes, right? Everybody's like, hey, is this too good to be true? Well, my experience in life, there's nothing that's too good to be true. It's just too good to be free. Who's experienced that? Is there, too good to be free? Is that terrible dad joke? I know. Drop me a 1 in the chat if you thought that was corny, and a 2 if you thought that was good. So, too good to be free. So that means, thank you. I appreciate the the votes. There we go. Split vote on that one. Good times. All right. So too good to be free. And what do we mean by that? Well, in the terms of business owners, your most valuable asset is your time. And I'm going to frame this as the S corporations are, there's some effort that needs to be made on your part. So I'm going to walk you through some of the maintenance requirements of an S corporation. and the cost of non-compliance are what you're at risk for. So maintenance requirements of an S corporation. One, got to keep it separate. Can't commingle. Like when I go to the dentist later on today, I can't pay for my copay with my business card. I need to pay for that individually with my personal, right? If I pay for it with the business, then that would be technically a personal expense that I paid for with the business. That doesn't mean we can't do those things. I should pay for that personally. And then the company, if it's a qualified expense that I can reimburse, sneak peek at tomorrow, we're going to talk about an accountable plan. I can reimburse myself and make myself whole. But I shouldn't be out there swiping my business card for my groceries and going to the movies and those types of things. Those are not deductible expenses. And in the few cases where that would be, it should be reimbursed as a separate transaction out of the business, right? Lock in your tax deadline. So, hey, congratulations. If you form an entity, there are different deadlines potentially than your individual tax return deadline. S corporations are due March 15th, unless you extend, and then they're due September 15th. You also have deadlines for payroll filings. You have deadlines for issuing 1099. Those are the same if you're issuing 1099s to subcontractors. Those are the same for individuals if you're a sole proprietor. So that's not a legit. Told you we're live and unscripted here. There are also, if you create with the Secretary of State, there are requirements where you have to complete legal updates every year. So there's called, in most states, it's called the Statement of Information. And so you're required to put out and say, hey, this is what the changes are that have happened or have not happened in my business. So at the end of the day, it's important to understand the requirements of those. I'm going to talk about the BOI reporting here in a moment at the end. Remind me if I don't hit that, remind me about that. With S corporations, it's absolutely critical to understand distributions and tax basis. But at the end of the day, I want you to keep one thing in mind and have this burned into your brain. There is only one share or classification of stock for an S corporation. So if I'm 50-50 partners with somebody in an S corporation and we want to take out a quarterly bonus, we crush it that quarter, and I want to take 10 grand out. My business partner also needs to take an exact same amount because we're 50-50, we're equal partners. So the distributions have to be equal. And you'd be surprised how many business owners have not nailed this or have trouble with unequal distributions, right? Very important. You also can't make distributions in excess of your basis, which means the total profits and contributions and the things that affect your basis. Because if you take distributions in excess of your basis, that creates a capital gain, meaning I took out a business loan and I took out all my profits and then I drew money out that were actually loan money or debt. Now I've created potentially a taxable gain issue unless I account for that the proper way. So that can be a little funky, kind of wrapping your head around what's the new normal. You should really establish corporate governance. By that I mean corporate compliance. So when you sign up for a corporation, either an LLC or a C-Corp, and then make the S election, there are requirements, even if it's just me, myself, and I as a solopreneur, there's requirement to have an annual shareholder meeting and to keep documents and minutes and resolutions, so on and so forth. That is an area in the chat. Drop a line if you have a corporation. Drop me a one if you do have corporate compliance in place for your business. Or if you have an S corporation, drop me a 2 if you don't have that. If you don't worry, we have a resource that we're going to provide to you, 1 year of free corporate compliance coming up. Okay. So in the requirements for maintenance for an S corporation, there's also this pesky reasonable compensation. We're going to drill down on this one. So these are kind of the maintenance requirements. Who is aware or any of this new, new to you, if you're, drop a 9 if this is new to you, or a 0 if this is all old hat, if you knew all this, right? S corporations, a lot of information in there as far as the mechanics of what you need to do to maintain. So reasonable compensation, what the heck does that even mean, right? At the end of the day, reasonable compensation is salary for work performed, paid through payroll, and is fully taxed, meaning this is a requirement where payroll, it's fully taxed, meaning taxes are taken out of your paycheck as you go through the Social Security and Medicare taxes and or federal income tax. So reasonable compensation is actually a requirement of the IRS, and they don't give us a ton of guidance. I took a screenshot from the IRS website. They give us like factors in determining reasonable compensation, training and experience, your duties and responsibilities in the business, time and effort devoted to the business. But at the bottom there, they say the use of a formula. You should really use a formula to determine compensation. Well, I'm going to show you a tax myth. There are CPAs and accountants that say, oh, 60-40. You could take 60% as W-2, 40% as owner distribution, or 50% as a W-2 and 50% as owner distribution. There is no set standard. That is completely false. And folks, if you go into an IRS audit and they are looking at your reasonable compensation, and you're paying yourself $60,000 on $100,000 net income, they might say, oh yeah, that's great. They're not going to question it, because if you're overpaying in Social Security and Medicare, they're not going to say anything. They'll be, oh, that's fine, that's reasonable, sure. If you're underpaid, and I'll bring up an example here in a minute, then they're going to fight you on that. But there's a gap between what is reasonable compensation and what should we be paying ourselves. So I'd like to introduce you to the concept of something called a compensation study. This is where we remove the guesswork, apply a method to determining your salary, and ultimately help people pay less in taxes. So how do we determine? There are 3 acceptable standards in a compensation study. And the first is, I'm going to go from least common to most common, the income approach. Well, this would be an independent investor approach. This is more difficult to determine or use. It's rare, it's used in hard to define roles, not commonly used, and is much more specialized. And if we go this route, generally speaking, we're going to need somebody that is more of an expert in the payroll arena to really dive in and do some research on how do we pay this person. Their role is truly unique, right? The market approach is it's called an industry comparison. And this is where you can say the same role across the same industry for compensation comparison, right? And what would it be the cost to replace that dedicated role? This is not as common of a methodology, but it is more common if you have somebody like in a C-suite. They're a true CEO. I had a guy his name was Scott, and he had a law firm, but they specialized in like developing class action lawsuits and like marketing and advertising and finding people that were affected. If you were affected by blah, 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 you should join our class action lawsuit, right? So Scott had grown his company from like 50 employees all the way up to like 350 employees in a period of about 2 years. So with Scott, he was a true C-level executive, like he's a true CEO, and versus at the 350 employee level versus the 50 employee. I asked him, I said, when you had 50 employees, how many employees did you know by first name basis? And he's like, darn near all of them. Like, and I knew their kids. And he's like, we were a family, as a smaller company, and I knew almost everybody by first name basis. He said, now I pass people in the hall and they're like, oh, hey, Scott. And he's like, hey, how's it going? And he's like, I don't know who you are. Right. He had graduated from a owner operator role into more of a true CEO level. That's how we determine the reasonable compensation on the market approach, is we're looking at what are CEOs, what are operations managers, what are HR managers in that role in a similar type company. So it's easier to kind of find that out, if that makes sense. So moving on to where I find and the accounting profession finds is the most common role, and that is the cost, or what's called the many hats approach. This is where your time as a business owner, you're really in an owner operator role. Your compensation is allocated over the time spent in various roles and responsibilities. Guess who put this PowerPoint together? Me. You could probably tell. So at the end of the day, I wear multiple hats in my business. So if I were to bifurcate my time and say how much time does Chris spend on PowerPoint presentations? These days, it's a lot because we're developing a lot of content like this. And so, what would it cost to replace somebody for those hours in that role, right? So then we can take my time and allocate it out between, creating presentation and drafting, blog posts and articles, et cetera, versus actual time spent on tax preparation and tax consulting. So that's the most common methodology, is the many hats approach. And the goal at the end of the day is to kind of figure out what role do you have in your company? What role are you filling in your company? Are you a true CEO? Are you out of left field, totally random, like I'm a research and developer for some random whatever? Or are you kind of the owner operator, right? So those are the different ways that we can determine the compensation. I want to tell you a tale of two people. So one was the underpaid attorney, and the other one was the overpaid consultant. So the underpaid attorney, he was crushing it. He had a really great staff. He had an office manager that was a great gatekeeper, and he was just able to bust out cases. He was a divorce attorney and had some great paralegals. So he had the dream team. He was paying himself $30,000 a year when he was making north of $500,000 a year in his corporation. I looked at him and I said, bro, in what world are you going to be able to find a paralegal that you're paying 30 grand? Do you pay your paralegals? He's like, nah, they make about double that. I was like, okay. So in what world are going to be able to find an attorney to do the casework that you're doing at through $30,000 a year? That's not this reality. I'm a Marvel fan, but that's not this universe. Put a Marvel or DC? Are you a Marvel or DC fan primarily? I'm a Marvel fan. So I love the whole continuity and the multiverse, all that stuff. So in this multiverse, that 30 and neither. Okay, that's fair. This multiverse, $30,000 ain't gonna fly. But on the other hand, I had a consultant who had a team, had subcontractors that she was working with and outsourcing stuff to. She was client facing, but then dished off a lot of stuff to kind of her back office team that was outsourced. She was paying herself $425,000 a year on about $500,000 profit. So two very similar cases. She was way overpaying herself, and she was told that her W-2 is effectively 100% of the corporation profit. I called baloney. So in the attorney's case, we increased his compensation, which sucked. He was paying more in Social Security and Medicare tax, but that also opened the door for other tax strategies to come to play that helped reduce that burden. For the consultant, we ratcheted her W-2 way down. It was around $90,000 a year. And at the end of the day, that saved her a boatload, like north of $16,000 a year in payroll taxes. So the risks of getting this wrong, right? If you have low W-2, that's too low, you could be looked at by the IRS for an audit to say, hey, why are you paying yourself so little? Which, if there's a reason why you're paying yourself so little, that's fine, but you need to be prepared for that conversation. And are there penalties and fine? There are penalties and fines that go along with that. If they say, oh, you should have been paying yourself more, and we're going to reclassify some distributions to be payroll, which means you owe payroll taxes, and there's fines and penalties with that. And they could, it's rare, but they could revoke your S corporation election, which would put you in a position of paying full self-employment tax as an LLC or double taxation as a C corporation. On the other side, if you're paying too much in W-2, you're wasting dollars on payroll taxes and not optimizing your owner draw. So the cost of non-compliance is you risk your termination of your S-Corp, you risk double taxation as a C-Corp, or the high self-employment taxes as an LLC, penalties and fines. And if they bust you for this, they say, hey, you can't be an S-Corp anymore. You're prohibited from creating or being an S-Corp for up to 5 years. So that could really put a hamper on any, business expansion or business plans. So areas with S corporations that can get sticky is people taking ineligible deductions, or things that they shouldn't be deducting, like the not keeping their finances and personal and business separate. My example, the dentist going later today. Missing tax deadlines because they're not aware that there's a different tax deadline, failing to file legal documents with the Secretary of State or the government, and then that reasonable compensation. So, questions, thoughts? I've been going through this. I'm keeping an eye on the chat. I don't see any. Oh, see a Q&A. Nope, answered that one already. Perfect. Any other questions, thoughts, conversations around this? Put in the chat if everything is clear as mud, or if there's any questions you have. I'm going to move forward a little bit here. So remember this little gem that we showed earlier, that whole taxpayer roadmap? Well, S corporation compliance, it seems straightforward, but then you're like, okay, well, I've got to do all these things, and then the reasonable compensation conundrum, right? So if you're with me here and we lit a fire at the beginning, I can tell I have your focus because I've got the, some votes for not a Marvel fan or DC fan. So I appreciate you focusing in. Can you see the impact that an S corporation can have on you if it's the right legal fit, and if it's the right call for your business in making S corporation an owner draw? So a gift that I'd like to give to you today is we've created something called your S Corporation Success Guide. And what this is it's 7 easy steps or 7 areas that you need to examine and be aware of with a checklist. I'm very proud of this. I think I posted on social media the other day. I spent a couple hours creating a really dope resource, and I'm very proud of this. And we have an amazing graphics arts team that's put this together. So this S Corporation Guide is actually in our resource center that we put together in our tax savings community. I'm going to stop sharing my screen for a moment, and I'm going to share a different screen. So this is our free, completely free tax savings community or tax strategy focus system community. Again, this is totally free to you. And inside of the classroom section, you can see that we have replay, day 1 replay with resources. So I have put the webinar replay will go in there, but this is already live and in the resource center or in that classroom. There's the S Corporation guide and checklist, as well as a reasonable compensation playbook. I'm going to show you that in a moment. And those resources are right there down at the bottom. Okay. So you can go to our maketaxesfair.com/community. And that is where you can spot that the replay for today, as well as the resources that we are sharing with you here. So this S Corporation checklist, it gives you a suitability checklist. Is an S Corp the right thing for you? A legal formation checklist. Have you hit all these things? If you're going to DIY, again, I do not recommend that. But if you're going to DIY that, bouncing around here, legal formation checklist, a financial infrastructure. How do you separate personal versus business and the considerations and things that you need to do there? A reasonable compensation checklist. How do you determine reasonable compensation? Tax deadline checklist. What are the tax deadlines you should be aware of? The corporate compliance checklist and deduction optimization checklist. All those checklists are all part of this S Corporation, optimizing your S Corporation in 7 easy steps. Okay. Who has ever seen or who has received from their accountant Put a 1 if you've gotten some sort of checklist like this from your accountant. And put a 2 if you're like, wow, this is brand new to me. So 2, sweet. Okay. Well, this is yours free. And guys, this is another, it's a tagline that we have being trademarked right now. I want you to raise your right hand with me. Can't see you on the webinar, but raise your right hand. Say, I solemnly swear that friends don't let friends overpay the government. Guys, if this is useful to you, this free community that we've put together is free to the planet. If you're self-employed, this gift is there for the world and all the resources that we're putting into this community here. So the second gift that I would like to give you is this. This is free to all attendees here. If you have an S corporation now, and I've seen a couple people comment that the reasonable compensation is new to you, we would like to gift you a personalized compensation study for your reasonable compensation records. So what that means is we create a custom report for you based on your compensation and the time that you spend in your business. So it's going to require a time audit on your part, but we'll walk you through that. We're going to give you a template as part of this for corporate adoption. So there's that corporate compliance component. Once you determine what reasonable compensation is, there's a document that you can use to formalize that and to put in with your record book like the big wigs do, right? The Amazons and the Apples and the Walmarts of the world. They do a compensation. Hey, we're going to pay our officers of the corporation X dollars. And we're going to gift you 1 free year of corporate compliance. So if you do not have that covered, we will gift that to you. Normally, and if you buy this a la carte, you'll see this. If you go to our website, we have a link in the resource center in the community there. We charge $3.99 for a compensation study, right? That's what we charge, and we gift you all these things. But for you guys today, and I'm going to take a screenshot. So the attendees that are here right now while I'm talking about this, if you have a corporation, you get this for free 99. It's a steal. We're going to give it to you right away. If you're watching the replay, so if you're catching this on the back end and you're catching the replay, I'm sorry, we are not giving it away for free. We are giving, you can access the maketaxesfair.com/compensation study, and we can help you with this. Again, we do charge for that service. However, we have a VIP community, and there's, when you go into the free community with the replay, there's some details. If you join our VIP community this month, we're giving away a compensation study to new people that join our VIP community. So check out more about that there. This replay and these resources are already posted in the community. So maketaxesfair.com/community. It's free to join. And then once you get access, that is where all these downloads are and the replay of today's webinar. In case you wanted to pull this back up and listen to me at like 3x speed. I don't know if you can do 3x speed, but at that point, I'm pretty sure I sound like a chipmunk. So if you want to check this out, please do so. And again, share this with friends. So before I go too far and do a sneak peek, who got something of value today? Drop a yes if you got something of value, if you feel like your time was well spent with us today. Appreciate that. Your time is your most valuable asset, period. We don't get that back. So, and Melanie, you saw this presentation version 1.0 of this. This is version 2.0. Hopefully it's a little bit more clear. And Melanie was part of a test group where I tested some materials. So thank you for participating in that. And I'm interested to hear your feedback. So mañana, tomorrow, we're going to be talking about board of directors. Who here, put a yes if you have a board of directors installed for your S corporation. Put a no if you are like, what the heck? So I see a yes, I see a no. So that's awesome. I love it when I see a yes, people that are dialed in, because most of the time we can help dial it in even further, keeping more money in your pocket and less to the government. We're going to talk about corporate compliance. What does that mean? Go into that a little bit more detail. And we're going to talk about, can't talk today, we're going to talk about something called the accountable plan. So there are more freebies. I'm super grateful that you're here live with us today. Tomorrow, there are going to be more freebies if you attend live, some bonuses. So again, if you're catching the replay of this and you want to attend live tomorrow, there's going to be some incentives to do so. But questions, thoughts? Who's going to share this? Who can think of a friend? It's a new year, so one of my resolutions is to make more friends. Who here can think of a friend that could use this information? Who's going to share this with a friend? Because again, friends don't let friends, and we are working on putting that on a t-shirt. So swag is coming. So appreciate you being here. Would like you to share this information with a friend. I will say this. If you share this with another self-employed business owner, maybe somebody that's on your board of directors, we'll talk about that tomorrow, you enlist an accountability partner, right? Change happens when you have somebody that you're accountable to, other than your spouse or your significant other. Maybe it could be them, but change happens when the likelihood of change happening is much higher when you share information with somebody else and say, hey, let's do this together. And there's nothing more exciting, not many things more exciting in my world anyway, than paying less money to the government without the fear of audit or jail time. So thank you. If you felt like, again, today was valuable, if you would like the link, I can share that with you. I can pop that to you in an email. Just reach out in the group. And if you wouldn't mind, if you wanted to pop maybe a social media post and say, hey, I just attended a really amazing webinar. Link to join for day 2 and day 3 is here. And I'll put that in the replay. I'll put that in the community and put that out there. If you want to share the link to social media and say, hey, would like to share this with other people, I would appreciate that. Because at the end of the day, we pay taxes, right? We have, let me find that link here. Give me un momento, por favor. Let me find that. I'm going to copy the link and drop it in the chat if you want to drop that there. Let me test that link, make sure it works. Yes, it does. So it's not too late to join, and people can still get the resource, the replays, all the things in the community. That's where they'll find them. And at the end of the day, where was I going with that? Oh, we pay taxes for a reason. There's infrastructure. There's, I don't dispute. Some people are like, I want to pay nothing in taxes. I'm like, good luck. That means you want to make zero income, right? Zero tax means zero income. There are and can be instances where we can get you down to zero, but at the end of the day, there's going to be taxes due. But tax evasion is illegal, but tax avoidance is completely legal. And I'm sorry, I can do better things with my money than the government can. I'm not opposed to paying my fair share, but I definitely am looking to optimize, and we love doing that for our folks. So appreciate you being here. If there's no questions, and if you have questions, you can also drop them in the community. There's a Q&A section there, and you can drop questions if you have questions there. But who is going to take action, join the community, and check out those resources? Let's make that happen. And like I say, friends, don't let friends overpay the government. So thank you for your time. And I'm going to leave you here. We promised to keep it at an hour tight. So I'm going to do that now and say hasta la vista, and we'll see you mañana. Thank you so much, everybody. Bye for now.